Good morning, everybody. We're going to take a look at gold. You can see what's happening with it. It's in a little bearish consolidation phase at the moment. Now, the reason I say it's bearish is because when you get a big move down, like we've seen from September all the way down, okay, this a case of higher highs and higher lows does suggest gold is going to go to the downside. Now, you can see that line here that I've drawn in, and that's coming in today or this week, the rest of this week, at 11.98. Well, we know we've got support at 11.98 to 11.95. So if we start to break down below 11.95, we need to get out of any long positions. If you look at the 200-day moving average here, that's coming in at 12.34. So that could put a lid on it as well. You've also got the 38.2 at 12.44, and you've got this trend line coming in, and that's trading around 12.54. So unless we do make a concerted effort to break above that 12.54 area, the market will come back and it will stay trading within this little range here. Obviously, if we do break higher, you've got the 50% fib level coming in up 12.68, and you've got the 55 weekly period average coming in at 12.74. So you can see you've got an awful lot of resistance above. Now you've got on the downside, we're trading at around 120.20 at the moment. The alarm's going off. We're trading around 120.20 at the moment, so we're above the weekly pivot, and our daily pivot is at 12.20. So let's pop along to the daily and have a look. Right, now this is that little consolidation phase that I've showed you on the weekly. So although it's easier to trade once you know the parameters, and that's what makes it, you know, much better. Now if you look at what gold did when you took the low to the high, we actually came back to the 61.8 at 11.97. Look at all these tops and bottoms around there. You know, it's quite a few, so it's going to be hard pressed, I think, to break down below those lower levels. At the moment, the market is all technically looking to go higher, which is a good thing. As I said, we're above the daily pivot. Now they're quite important, obviously, as we go into the week. I think the daily pivots are quite important, and especially when they intersect with two really good moving averages, which they're doing at the moment. You've got the 12.14, which is the 21-day moving average, and you've got 12.17, which is the 9-day moving average. So you can see around here, you know, you've got some quite good support. You've also got support from the weekly pivot, which is coming in at 12.13, which again is intersecting with 12.13.55 day moving average. So, you know, we've got everything to play for here. I still think currently we buy dips down to the 12.13 area. I can't see any reason why it wouldn't break. You've got that 12.27 on the daily charts, but don't forget those weekly levels of 12.34 and 12.44. They're going to be quite important. Anyway, have a good day. I'll catch you tomorrow.